Did
Welcome
we freeze
to
up?
what's that?
Well, never mind. I just asked you if we froze up, but apparently I froze up.
You froze up. I'm perfectly fine here. Welcome to Tradiers, the Trader's Edge. I'm Iuorio. That's Bob Iaccino. And you guys are the audience, and you guys are the most important person in this whole thing. Thank you so much for being here. Bobby, the stocks were up a gazillion today. Why?
Yeah. I think it's a number of things, but let's point to the eco data first. I don't think that's the most important, to be honest. We had about 2.7% of the S&P 500 market cap report this morning. Now, that's not a big number, but it was still about 1.42 trillion, which we all know there's stocks bigger than that individually, right? But we had 5 stocks today, and I may forget them as I go list them off.
The
JP
banks.
Morgan, Citi, not all of them, but yeah, JP Morgan, Citi, Wells Fargo, Bank of New York Mellon, and there was one, Goldman Sachs. Yeah.
Right.
They all reported today, and they all killed it. The least gainer, at least as I'm speaking to you right now, was JP Morgan, up, I think, about 2.2%, somewhere in that range. We had a couple of 7% performers there. Now, not only that, but on the backs of that, we had Bank of America and Morgan Stanley, who didn't report, rising over 2.5%, 3% each, just on the backs of this. Now, there is data showing that when banks do well, the economy does well and the stock market does well. It's not exclusive. Doesn't have to happen. Banks can do poorly and stocks can go up. But there's a lot of data showing that when the big banks do well, the economy does well and the stock market does well. So I think we should pay attention to that.
I do too. And so here's the way I look at, by the way, what just happened to your camera?
I have no idea.
It says El Gato, which I know
That's
a little
the kind
bit
of camera I use. So
Spanish
I don't know
means the cat. So yeah. But anyway, you want to monkey with it or you want me to just keep going?
Yeah, I'm going to play around with it. Keep talking though. You can hear me, right?
Okay, yeah, so I can hear you for sure. So look, if you can concentrate on this question, because I think it's interesting, is that here's the way I look at earnings season. 70% of it is tech earnings, 20% of it is bank earnings, 10% is all the rest. What do you think?
I think that's accurate. But here's one of the things about that is when you look at it from that perspective, we're getting that smaller number over the next couple of days. And the few that we have this morning definitely reacted in a way that would suggest that the ones that we're about to get are going to be strong as well. But I really do want to see regional banks this time. Like, I don't want it to be just big banks.
So, you know, what's interesting is that I own Goldman Sachs. And again, my licensing is for futures. I don't recommend buying or selling stocks. I own Goldman Sachs. Do you know why I bought it as a trade? Because Hillary Clinton was going to win the 2016 election. And I thought that she'd be friendly for banks. And I know when you take a trade and put it into your investment account when it's a loser, that's a terrible thing to do. But taking, covering 3/4 of it, because I went from trade position to investment position, and then putting the other into investment account has worked out very well. Do you ever do that? Anyway, Bobby appears to be fully gone, which, by the way, guys who are watching, this, of course, is my dream, to have nobody interrupt me and just to keep talking. So here we go. As long as Tradier wants to have it, it is just me. Here's what I saw today. Okay, so CPI comes out. The headline matches at 2.9%, which is exactly what we were expecting. Okay, now this comes in light, a little bit in the shadow of the PPI number that was better yesterday. So CPI comes in as expected. However, we see ex-food and energy come in slightly lower than expected month over month and year over year. So stocks go through the roof. 10-year goes through the roof as well. So the stocks, I don't know, my Bloomberg is up right here. I'm just kidding. I don't expect you guys to see the level. I'm going to show you the level that I think is important.
Level of what?
What? Well, this was so much better without you. Now you're back.
At least I can put a chart up that everybody can see.
Yes. Okay. Oh, let's look at the stocks then. You can put a chart
up.
You
want to look at the S&P, right?
Yeah. By the way, I didn't seem like I was in a panic at all alone, did I?
No.
Viewers, comment, please.
All right. So I'm going to put up an SPX, right? So it's not going to be a futures contract.
That's fine.
But you'll be able to see it. It should be, well, Luis can put it up now. So give me a second here to put it up. There it is.
Right. So this is what I'm looking at. To me, that's done nothing to knock us out of the downward wedge that we've been in since, when we put those highs in, which was back in, early December. How do you interpret this chart?
All right. So when I look at this particular chart, I see, let me get to it because that's going to help me explain better what I'm seeing here. When I look at this chart, I'm basically seeing a short-term move higher and a short-term reversal. But there is a trend line there that matters.
Yeah.
Right. And I don't have it drawn in here. And man, I am having technical difficulties today. But I will try and get that drawn in before we're done talking about it. But I agree with you. I don't think, here it is. You got a trend line right here. So there's one here. This isn't the way that I draw trend lines, by the way, people.
Yeah.
Doesn't matter to me how you draw them. This is the way that I draw them. So when I put in that one and then I put in this one, there is quite a bit of work that needs to be done before the shorter term down move is complete. I can also draw this lower trend line here, which shows you the wide downward sloping channel we've been in. Now I'm above, you're seeing all this, right, Jim?
Yeah, sure.
Okay. Now we are above short-term indicators for me, but we're not in a buy signal for me at all. Not in the least. So if you look at sort of these moving averages here, I'll give you sort of a background of what they are. And let me, so this cream colored one is the 8 exponential. This blue one is the 21 exponential. And this green one here is the 50. Okay. We broke above those three, but we're nowhere near, you need confirmation of this kind of a move. And when you've got a down channel like this, it's not only possible, but it's likely that we go back down and fill this gap. All right. Now, then it might rotate back up and break. I'm not saying people should be short this. There's absolutely no way to be short this. Longer term, I'm compressing this so you can see the 200 here. Okay. The 200 is well below. So you look at this, and the way that I view it is medium-term downtrend, which you're seeing right here, long-term uptrend, which you're seeing right there with the 200. So I don't think we've gotten to a point where you can go long this safely, although people may have done that. There's a lot of bottom fishers out there.
So you and I have both been of a similar mindset regarding what we thought would happen the first half of 2025.
Yeah.
Is that transitions are difficult and they can be clumsy and ugly, even if you're going from what I considered, an opinion, bad economic policy to far, far better economic policy, which is, I believe that's what we're doing. And by the way, if you want to take the other side of that, just look at dollar flows from around the globe. All I can say is that a lot of people seem to agree with me. So, and I think it could be an inelegant sort of transition. I think stocks have a difficult time, particularly if we start running bigger deficits due to the tax cuts, due to the regulatory cuts, before we start to really get to supply side solutions to inflation. Like, one of the reasons I think everyone was so giddy today about the goddamn CPI number is that everybody knows deep down that 2.8 to 2.9 is probably closer to the Fed's preferred target than 2.0. They just haven't said it out loud. By the way, prior to inflation, they used to say it out loud all the time. They tell us exactly what they were going to do and why they were going to do it, and said they were going to let it run hot to get an average of 2%. Remember, we got a lot of time we were going below 2%, and they think a lot broader than we do. What is that chart you just put up? That's the monthly?
Yeah. So this is a monthly. And the reason I put that up is because obviously we're still in January, and today made us positive on the year. So obviously positive for the month. All you got to look at is that last candle there. And there's a reason I brought that up. But first of all, I want to touch on what you just said. They absolutely said it, right? Back when there was no, in everybody's mind, no probability of runaway inflation,
right?
Which is basically another way of saying what you just said. They said it, right? And they said essentially, we might need an adjusted average, which you and I both questioned, what the hell's an adjusted average? I took statistics, and I don't know what that means. In other words, if you translate that or take some of the words he actually said, he said that the Fed, and this is Powell, the Fed may have to allow inflation to run above 2% for quite some time.
Yeah.
Now, if you look at this CPI number, and I'll be back to this chart in a minute, this CPI number, right? It was lower than expected, but I think it was mixed when you added in the year over year headline. But I think it was more that it didn't beat than anything, because food was up 0.4% in November. Food at home was up 0.5%. Food away from home up 0.3%, hence the 0.4 average of the two. Gasoline prices over the past 12 months dropped by 8.1%. Fuel oil decreased by 19.5%. Food away from home only increased by 3.6% over the last 12 months. Take those energy numbers. What are we seeing right now in energy? We're seeing a move higher.
Oh, yeah. Significant.
Right? So you take that last 12 months and say, well, gasoline price decreased by 8.1%, and you still had a 2.6, 2.7% inflation depending on what you were looking at, right?
Oh, yeah.
What I'm showing you here in the month of January is to talk about the January effect, right? So you know what that is. I'll
Sure.
explain it.
As
January,
January goes, the year goes, right?
yeah, it's a market phenomenon where stock prices rise more in January compared to other months. And when they rise in January, the year tends to lean positive. It's about 62% of the time going all the way back. If you go to the Dow, you can go to 1904. But if you go to the S&P, you're looking from about, let's call it 1977 or so. It's probably a little later than that. But from 1904 to 1974, the average stock market return, we're talking about the Dow, in January was 3.48% compared to 0.42% in other months. Between 72 and 2002, small caps consistently outperformed large caps during January, right? What's significant about 2002? The Fed started to get involved, right?
Yeah.
Period of 1977 to 1993, excess January returns for the equally weighted indexes averaged 2.9%. 28 to present, stocks have averaged 1.2% in January compared to 0.6% for other months. The effect is more pronounced in small cap stocks, according to this data I'm reading from. And looking at the S&P in January 2023, the S&P was up 5.8% over the course of the month of January. We have essentially it's less pronounced over the last few years. But as Jimmy said, as goes January, so goes basically the year. And that's been pretty steady going all the way back to, let's call it 1982.
And there's no work that's been done on, like, if January is up 5% versus January being down 0.5%, or by the magnitude, is just as a minus or a plus is the only
It's a
thing that's
minus or a plus. And you could literally have a 15 to 30% pullback, which I've talked about this year,
right.
happening this year. And January effect could still be right because we could finish the year up 6%, 7%, 8%. Also, the fourth quarter of the year is usually the strongest quarter.
Yeah.
So when looking at it from there, I mean, you could have all of the earnings for the year in the fourth quarter. People
Okay.
be out of their minds with stress.
So, yeah. So give me now, what's your signal now to when you are going to be like, shit, all of us, we're talking about a bit of a pullback and buying at a lower rate at lower levels. When do you throw in the towel? At what level?
Wait a minute. In terms of what? In terms of the market
Buying
turning
it.
back around or buying it?
Yeah, buying. When do you say, like, if you get to settle above the wick of that red candle that's next to this candle, that's
All
a
right.
weekly, I
So
assume, right?
this is a weekly.
Okay.
Okay. And if you look all the way back, I mentioned this 8 EMA and this 21 EMA right here. These are 8 period and 21 period. So if I go
So
to the
week.
daily, it's the 8 day. If I go to
Right.
the weekly, it's the 8 week. We moved into here and we got a flattening out of this particular combination of these two, which Mike Arnold calls the rotation zone. But if you look at where this sort of thing held, let me draw a horizontal line right here. Okay. We closed below it and then we closed back above it. And now we're right on this best fit trend line. What's the best fit trend line? It's just a trend line that sort of shapes the trend. It doesn't have to be perfect, right? If we can get a weekly close above this trend line, and I'll even draw it to where most people probably think it should be, which is like right about here. All right. We get a weekly close above this trend line, which right now comes in, looks like it's coming in. Let me make sure this is adjusted here. No, that's fine. If we get a close above this particular trend line right here, I'll go long. I'll be long. I'll be long for the foreseeable future. And my guess is that if we get above this sort of open close combination on the weekly here, that we're off to the races. So my signal is above this trend line. So it comes in basically about 6,000.
So I would say, I look at it the same way. If a signal's above the trend line, I would prefer a signal above that, above the body of the red candle, a settlement above there, which would be above the trend line as well, or is it close?
Yeah.
Okay.
No, it's above it. It's
Okay,
above
so
it.
that's an engulfing candle. And then, but what I need then in the next week, I need a settlement above there, and then I need strength above it in the next week for me to get my signal. Do you look for confirming strength in the next bar, or you just look at the bar?
So on a weekly chart like this, so for example, let's imagine that this would have been a signal short. It was not, by the way, because it stayed within the rotation zone. It's actually more than just that, but just to show if that would have been a signal short for me. This particular move accelerated and then moved back up. I would have had to stop basically where this dotted line is.
Yeah.
So I would have gotten in. Now, in this particular case, above the trend line, I need to actually see a move above this high right here. And this particular high is 6,021. I need to stay above there. So if I get a close above here, I'd look for a second week's price activity. But I might go down to the daily and sort of fine tune that trade, right?
Yeah.
So if we take that level of 6,021, which I'm guessing is right around here, it's in this area somewhere. If I redraw that daily trend line that I had, again, this is the way that I draw them. There's a second trend line here. Let me get the trend line back in place right here. I would have two trend lines on this daily chart. And if it looked like we were going to close above, so this trend line comes in about 6,042, I could fine tune my entry here. So if we get a daily pullback and then a move back above this trend line somewhere in this region here, I would go long and I would dollar cost, I shouldn't say dollar cost average, because that's not what that would be. I would split my long into 25, 25, 25 in terms of percentage of the particular position I was going to put on. So I would scale into it. That's what I'm trying to say.
I like that a lot. And we are basically on the same page with reading this chart. I think that right now, again, like you said, I see nothing, but it's interesting and it deserves watching. What else do you want to talk about? Let's talk about oil. Well, but first of all, kudos to Bobby. Don't talk about oil. Let's talk about natural gas. You were the one, you came on and you said, this is weeks ago, that natural gas is a buy. You were long it. Holy Jesus. What a home run that was.
Yeah. It's one of those.
Go walk us through when and why you buy it. I think I know. I think where that green candle breaks out back a little bit further back than that. I think where you bought it and about 3 candles back.
Oh, this is right here where I bought it.
Right. That's where I would buy it too. Broke out of the little consolidation pattern. That best fit trend line, I can eyeball it. Then confirmed. Boom, you bought it. It's been somewhat of a home run. Where are you getting out? Where are you taking profit?
So I got out with this runaway open here. Okay, so I already got out of that particular trade. But here is just a good example of what you're talking about in terms of pullbacks, right? When we had this gap open up here, my view is that it was going to fill the gap and it could continue and accelerate back into the rotation zone, which would get me way too close to my entry price. And it was sort of a psychological thing. Now, for me, I've been trailing the whole way up anyway. I almost got stopped out here January 3rd. But I didn't want to, I pulled the stop back, or rather I should say I didn't put the trailing stop in until we got past those couple of days after the new year, right? But the trailing stop for me got moved up to the open, the close of January 10th on the open here, because I figured this would get filled. So I was like, okay, that's enough. I don't want to get greedy here. Now it's moving back up, but it's run too far away from what I consider to be sort of congestive price action. I think it has to move sideways and correct a little bit. It may not. I mean, we've had weather that I don't think anyone anticipated. You've been experiencing it.
You should feel how cold it is out there. Jesus.
Yeah, but I mean, in a weird way, I experienced it in Florida as well, because we actually had a 39-degree overnight.
Did you really?
Yeah, we were close to bringing plants in and stuff like that, especially fruit trees, and kind of learning to cover them up for the winter, which I don't really know how to do because I never had fruit trees before growing up in Chicago.
This is the weather's crazy. And I'll tell you, as you know, because I talk about this all the time, I track the summer weather very, very closely, not because I'm trading it, but because I own a restaurant that has about 90 outdoor seats. So we need to know, and we need to know, patterns and collect data. And I will tell you this for nothing. The last 2 summers here have been cooler than normal, except for this September, if you call that summer, was warmer than normal. So we've had 2 unusually cool summers, and now what looks like a badass bite your nose off freezing cold winter. So if this climate change bullshit is coming, I wouldn't mind it coming a little sooner so I don't have to freeze my ass off all the time. By the way, that's a joke, you zealots. Don't worry about it. I'm just kidding. I don't know what I believe. I know a lot of people are lying to us, but I also know our summers have been mild. Do you have anything to add to that? What was the fundamental thesis for buying this? Was it cold? I mean, is that what you're buying it for?
No, it was actually just a technical breakout. And the reason I say that is natural gas, if any of you have traded it, there's very few stock proxies. But if you've ever traded natural gas, you know that it behaves very technically and very seasonally. So the technical breakout up lined up with the seasonal strength that we normally see in the winter. I had no idea about future weather. And as reliable as the farmer's almanac is, I think you have to be a farmer to read the cryptic signals in there. But this to me was more of a technical breakout and nothing else. I saw this as a short-term trade. It coming into the holidays, I obviously needed to sort of keep my original stop, which was all the way down here, right where this red line is. That was you saw that I switched to the chart. That was still there.
Yeah.
That was where my stop was. So
Okay.
taking it up to this, I said, okay, I'll move my trailing stop in here, and then the gap open is a typical play. If I get a gap open like this and we close lower, which we did here, this particular day was down 1.38%. That's generally all bets are off for me. I don't know what's going on at that point.
Right.
So without the resumption of the weather you guys are experiencing, I don't think this would have particularly happened. I think we would have continued down here. That's too much of a wild card for me.
By the way, how do people heat their homes in Florida? Natural gas?
Yeah, it's natural gas.
That's what I would have thought too.
So
Okay, so now that one that's a home run for you. This next one you weren't wrong on, but I was more right than you because I've been
I didn't
on
trade
oil. I've been on oil for the last couple months.
I didn't trade it. That shows you how not right I was, or I shouldn't say that, on how I wasn't wrong. I just didn't have a trade.
No, you didn't have a trade on. You just didn't agree with me that I thought it was bullish, but you didn't have a trade on. That's different than being wrong. That's a lot different than being wrong.
No, I saw more sideways movement than we're getting. Now, the interesting part to me is the fundamental. Those blue lines on top, by the way, are Mike Arnold's targets, which we hit one of them already, as you can see today. Now he's got the second one up around 82, 92. Now that could change if none of you have seen Mike Arnold. There's not a sponsorship pitch right now, but you should go to the Bath Trading Partners YouTube channel because he does all that stuff for free every single day. He's doing charts. So he may have changed this with the role of the contract. I don't know. This is a continuous contract, so I just left him on there. But we hit one of them today. And the interesting part about this to me, Jim, is that the demand side of things, part of it's coming from Germany, which is weird. Germany's, their heat fueled by crude oil hit an all-time high. And
are they freezing their asses off there as well or something?
I don't know what the weather is there. I just saw a report that their crude oil fueled home heat hit a record high, and their gas fueled heat was the highest since 2017. So I don't know. I don't know if they just ran out of coal because of their green policies, or I don't know what drove it. But that's where part of it's coming from. We also had, as you know, the outgoing administration put the harshest possible sanctions on Russia. They could have done it this whole time, but they're doing it now, I suspect, so that if Trump eases them, the media can say Trump loves Russia. That's just my own personal opinion. Not a political. Yeah, that was a political statement.
Well, no, it's not political. It's watching events unfold and having a basic understanding of psychology, particularly when it's these, essentially psychopathic, power-hungry narcissists that populate both sides of government. For them, power seems to be more important than actually caring for us. And I don't love the Republicans either, but the Democrats right now are doing just I don't know what they're doing. It seems like they're burning the crops as the armies are retreating. But the thesis that I had came on election night for crude. Why I was Widge has got a comment. You want to read it first, or because I do want to talk about
Go ahead, Luis, put it up because you're about to go through a thesis. So this is a good comment as usual.
Yeah, because I was going to.
Which says, I think the move to export LNG is the U.S. forfeiting a manufacturing competitive advantage and will take prices up for all of us. So I can see that being a longer-term play, even with new supply. I'm not sure I agree with this because there is so much natural gas here. And if we get rid of some of the EPA and the green movement to drill for that natural gas, if we start capturing natural gas instead of flaming it out at places where we just have no way to store it or transport it, I don't think we're forfeiting anything, but I could be wrong. I mean, that seems like more of a Doomberg question to me.
Yeah, no, that's interesting. And I don't, that's an interesting take, something that I'll have to look at, but I don't have a working thesis on that as well. But back to my crude oil one. So the night of November 5th gave me a little bit of a tell on oil, is that it is easy. It was the easiest play in the world to say to yourself, wait, Donald Trump is going to be a drill baby, drill president. supplies are going to increase, supplies are going to weigh on price, and oil's going down. So the second it seemed apparent that Donald Trump was going to win, crude had a small move lower. But then all of a
Right.
sudden, it seemed like the market had this collective consciousness where it said, "Wait a second! Even if you start digging new wells, and you're the one who taught me all about this, it's between 12 months to a year before you can't just flip a switch on and increase production. I mean, the wells that are going around,
Right.
no, we have a record production right now. That's on older wells. We're not opening new wells. We weren't granting permits. So we are kind of behind the 8 ball with production. Everything I'm saying you agree with so far, right?
Yeah, I mean, if we get the economic growth, not just here, but globally, to where the demand spikes the way the price is saying it will, I think we'll get a slight demand spike. I do.
Right. And that
But
was the second part of my thesis, is that I
yeah,
do believe that if Trump, right when he takes over, he starts cutting corporate taxes, starts cutting back regulation as he promised, which, by the way, last time he said he's going to cut regulation quite a bit. It didn't really work out all that much. But demand side boomed quite a bit, even without cutting out the regulatory bullshit. Did you see the small business optimism number?
well, we talked about it yesterday, and then I looked at it. Yeah, it's like it looks like an absolute crazy straight up chart.
It's a wow. It's a wow type chart. You look at it and you say, holy shit. By the way, so for you guys who haven't looked at it, the small business optimism, the 3-month average rally from November was the highest in the record of that index, the biggest upward move. It's not at the highest level it's been, but it's at, by the way, the second highest move over the last, since 1980, the history of the index was in 2016, right around November 5th as well of that year. Good. So, or November, whatever the election date was. So the small business seems to like Donald Trump. Of this, there can be no debate against. You can say that they're wrong. You can say that they're all political hacks, which, by the way, that would be a stupid thing to say, because if you're a small business owner, and I own several small businesses, Bobby's been involved with some with his family, I don't care who's making the policies. I want policies that make my business better and help it to thrive. I don't give a shit if it has a D after his name or an R after his name. So they don't care about it. Donald Trump being a Republican. By the way, Donald Trump isn't really a classic Republican anyway, but he is someone who seems to have business in mind and want a really, really vibrant corporate sector. You agree with all that, right?
I do, and I'm actually loading up just a screenshot I took of the small business index. Luis, if you get a chance, if you can put that up. And there's the chart. I'll zoom in a little bit. So here is the recent 3 months that you were talking about, this move right here.
Yep.
So
And guys, go
nowhere
back to
near where it was.
2016 too. 2016 was the other one.
Well, it's the highest it's been since pre-pandemic,
Yeah.
right?
Yeah.
So
It's been
it's
pre-pandemic.
obviously
Yeah.
dropped during the pandemic, seems obvious to everyone, but
Right.
this is the spike we're talking about here. And the thing about this is, within the small business optimism index, there is a component of likelihood of expanding your business, and that's somewhere in the 80 percentile, which we didn't even see pre-pandemic.
Right.
So very, very big, very, very big move in that index.
Huge.
And could actually drive hiring. Now, the interesting part is, one of the things in labor that we're starting to see is manufacturing and goods manufacturing, which are two different things, right? Goods are things that are sold to consumers. Manufacturing is all B2B. Those two are showing a slowdown in their hiring practices. Services is not, food and beverage is not, but those two are. And that's where about 90% of layoffs come, those two sectors. So we're going to start to keep an eye on layoffs. We'll let you guys know what we're seeing. But layoffs have not really accelerated. And it seems like there quietly might be signals that they're going to.
Okay. But I know that's soft data. But anyway, I'd like to take a quick pause here. This is going to sound like I am asking you guys who are viewing us a favor, but I kind of see it as a favor both ways, because you are going to love this offer from Tradier. Couple months free. How many months free of Tradier? 3 months free of Tradier Pro. If you trade options at all, if you are thinking about trading options, this is the tool for you. The analytics are out of this world. I've talked to professional options traders who tell us this is their preferred method for trading options. So we would appreciate you sign up for the 3-month no obligation trial of it. Check it out. And then I want to know what you guys think. So please, I keep my DMs open on Twitter. Tell me what you think of Tradier Pro. Tell us what's good, what's not good about it. I think you're going to find a lot good about it. So click on it. 3 months free. Thank you guys for the support.
All right, I'm going to show you a chart, and I'm going to go into why I like it while you are looking at the chart. Okay. So one of my theses, we already showed crude oil and the strong move we've seen in crude oil. I need crude oil to pull back. I can't get in it the way it is right now. But one of the things that has a really good data behind it, really good historical support, is crude oil's positive correlation, or I should flip that, basic materials positive correlation to crude oil as a sector. Okay. So I went in and I looked at the balance sheets of a bunch of basic material stocks. And these are all really solid balance sheets. You can see down at the bottom here that the Vulcan Materials, which is who this is, pays a dividend.
What do they
Okay.
pay? Let me get
46 cents. You're going to have to do the math if you want to know what that is.
No, yeah.
On a percentage basis. It's
Sure.
a 46-cent dividend. I know for a lot of people that trade, that watch us, it's like, it's $286. I can't really, what am I going to do? Buy one share? I say, yeah, buy one share. This particular stock, I like the setup. It's not a buy yet. Okay. I need to stress that. But what you got here is you got a cross down of the 8 and the 21, not a signal for me. Need to stress that as well.
Which
right?
one's which?
The blue is the 21. The beige color one is the 8. Yeah.
Okay.
Now they cross down, and you see what is a signal for me is when I get a move up that fails. Okay. Now I don't sell this. I sell more when you get a move like this. So this is just to give you an example of what I do with the 8 and the 21. When I see a move up into the rotation zone, which is what the 8 and the 21 are, then I got to close below it. This is not a signal because it's a green candle. Okay, I need a negative close. Now, this was a negative close change on the day, but not a negative close versus its own open. I don't like those. You can get a rally back from those. This, in theory, would have been a short for me, especially because it closed below the 200. I didn't do this trade, okay? But in theory, closed below my little move up toward the rotation zone and failure, got a negative close on the day and versus its own open. Then you got an extension lower. But what we're seeing now is a turn upward of the rotation zone. So now the rotation zone means nothing to me. I can almost phrase it like there is no rotation zone because it's not downward sloping or upward sloping. Well, it slightly is upward sloping, but the 8 is below the 21. I need them to cross for it to be upward sloping and then for price action to go back into it and reverse back up. So here's where I'm taking this convoluted mess that I just described. If I'm right that basic materials start to outperform, and if you look over the last quarter plus January, basic materials have underperformed the overall market, matching what crude oil has done, right? If this turns up and it crosses up and starts to angle up like it was here, okay, and we get a move into it by Vulcan Materials and then a move back out, I will go long this, and I will stay long it close to $300 as a target, figure 289 as a target on this one, okay? What are your thoughts on this chart that I'm showing you? Keeping in mind that I'm not getting long it now, I'm just looking to see if we get a long signal.
I worry about the gap being filled.
Yeah.
What, by the way, Vulcan Materials, what materials are we talking about? Do you know?
Hang on, I'll tell you. I got it right here. So Vulcan Materials is basically a lot of different commodities plus chemicals.
Okay. So it's just
mining, materials, chemicals, a lot of different stuff.
Okay. So I like this chart because I like the thrust higher. I worry about the gap that it comes down and fill it. If it came down, here's what I would need to be long it. I need it to come down, fill the gap, maybe kiss the 200-day again, go back through the rotation zone, although that it would still be sloping down in the event that it does that. So when I look at this chart, I see nothing that invites me to make a trade, but different strokes for different folks, right?
Well, again, I mean, the last thing I said was, this is not a trade for me.
It's not ready yet. Yeah.
But this kind of it sort of stresses what I think traders should do and what I do. I'm going to put up another chart while I'm talking about this. Is I don't get into something until I have a signal, even though I know that you have to jump the gun to make outsized returns, right? I don't jump the gun. I lost too much money jumping the gun. So what I do is I start to see charts like this one, Steel Dynamics, and I say, okay, What would be a long trigger for me here? Now, this one's a little bit more advanced, and there's a little bit more, some better signs on this particular one, right? On Steel Dynamics. I don't have to tell you what they do, right? Okay.
It seems like it's in the title. Yeah, I'm smart
It's
enough.
pretty
Right?
obvious. So I
They
think
steal things. But anyway, go on.
no, I can't draw on this chart. Never mind. There's a way for me to draw on this chart, but I'm not skilled enough to know what it is. So basically, you can see my cursor, right?
Yeah.
Purple is the 200-day. 200-day simple, I might add. All right. I don't know why I have it on here twice. Doesn't matter. So here again is the 8 and 21, and they've been downward sloping. There were no real short trades for me here. Possibly this one. Okay. But this obviously didn't play out. If this would have been a losing trade had I seen this and taken it, but also I should probably talk about this. So this would have been a move into that rotation zone, right? And I would have drawn this particular line here. And then this close below might have been a short. But prior to this close below, I had this hitch up in the 8. I don't like that. Okay. I need it to stay like this. So I could probably find one in here. Here's sort of a move into the rotation zone that ended up becoming a long. Here's a move into the rotation zone that ended up not, no, that wouldn't have been a short either. So let's keep talking about this. So what I have here is I have a rally happening, okay? This rally is not only against the rotation zone. In other words, it has not crossed up yet. Again, a cross is not a trade. It's fighting the 50 here. It's failing at the 50 currently, and it is not above the 200. If I get a consensus move up above this 200 that then comes down and tests, if I get a move above the 200, these two are going to cross higher.
Yep.
And the 8 and the 21 are going to catch up to price action because they're short-term moving averages. So they will quickly cross and catch up. If I get a move into the 8 and the 21 that then holds at the 200, it's going to be a screaming buy for me. Not only that, but it'll be filling this earlier gap that hasn't been filled, right?
Okay.
It'll be moving into this, which is what I call advanced space or a clear path.
Yeah, because there's so many red candles in a row. I
So
know I
many
see
red
it.
candles.
Yeah.
And traders like us, if you remember from the floor, you're still there every day. Guys remember prices that messed with them, right?
Yeah.
So in other words, if guys are looking at Steel Dynamics to me and, man, I mean, it was just a gap down between like 145. It was just a complete, slaughterhouse between 145 and 121. That means they may not play in here,
Right.
which means the liquidity will be lighter on the way back up. Just sort of a psychology thing that happens.
I like it a lot.
So this is another one, but this is all going in with the theme that basic materials move up with energy. If energy has a sustained move and it comes up with a lag. Now, I don't like correlation trades. It's also why I don't jump the gun on these kinds of things. People have asked me in the past why I don't like correlation trades. I'm like, well, basic materials correlates to crude oil at about a 70% positive rate, right? What happens the other 30%?
You lose.
You lose.
Yeah.
Right. So I've always said if I have an opinion on something, which I do have a bullish opinion on crude oil, right? Guess what's 100% correlated to crude oil?
Crude oil. I know this one.
Crude oil. You know this one.
Yeah.
So considering that I can't trade crude oil with this chart, right? Because it's run over. That's Colgate Palmolive. I can't trade crude oil with this particular chart because it's run away from all my triggers. I start saying, okay, what's correlated to crude oil that might give me a trigger? And I start to watch these charts. I don't put on a trade. I don't tell anyone else to put on a trade. For anyone watching this is not me telling you to put on either one of these trades, whether it's Steel Dynamics or Vulcan. But I think you should start watching these charts for a reversal in trend on them.
Can we go to Bitcoin?
Yeah.
Bitcoin is fun. Which, by the way, I know I say this every show, and I'm going to say it again too. The proliferation, the popularity of Michael Saylor and MicroStrategies, to me, is like just wildly asinine. Like if you are a trader and you don't think Bitcoin is a volatile enough asset for you, and you need to seek out a highly leveraged Bitcoin play, I don't know. It seems like yeah, maybe you're going to buy a 50-foot yacht, but it seems a lot more likely that you're going to be broke. Do you agree with that, Robert?
Yeah, I do agree with that. I mean, I think that he's got one play, and no matter what he says it is, it's one play.
It's one play.
And that's Bitcoin goes to $1 million.
Yeah. And
That's it.
again, this is a guy who lost, quite a bit of money in the tech wreck. Again, he seems like a hell of a good guy. He even seems like a smart guy too. But I question people with that level of surety. That's why
You know
Peter
what it
Schiff
reminds
and I
me
always
of, Jimmy?
what?
It reminds me of the taxi driver and the stripper flipping houses. Now,
Yeah,
it's not at that level. Sailor's not a taxi driver, nor is he a stripper. He's much smarter than me. But that
yeah,
doesn't mean he can't be wrong about this thesis, and he's leveraged up to be right about it.
sure. And by the way, the fact that he's much smarter than you and I, that doesn't all we've known some traders. You can't be an idiot, obviously. But if you're so smart that you think you are right about everything because your entire life you have been, that can bite you in the ass as a trader. And again, I
I know
don't,
it.
yeah, and it happens all the time. So I say no. Which, by the way, this Bitcoin chart looks an awful lot like the S&P chart, doesn't it?
It does. Just on that point, I know a guy that went to Princeton and Oxford and blew up his hedge fund because he was right too early.
Yeah,
He was just right too early.
right.
The market was going in a different direction, and he kept going in the direction that he knew was right. By the way, it was a yen trade. And he talked about what's happening to the yen now 15 years ago. And he blew up his hedge fund trying to trade JGBs in the direction that they now have gone.
By
Right.
the
He
way,
was just early.
it's an old tale in this business too.
Yeah.
Is that there are pigs, bulls make money, bears make money, pigs get slaughtered. And by pigs, I don't necessarily mean the greed part of it, although with Michael Saylor, I think there is an element of that. I just think that I'm grouping in this mental surety, like I can't be wrong, whatever. So Bitcoin, same as stocks, it's got to settle above that red candle, above that trend line.
All right. So I'm going to give a little bit of trend line insight. Now, the way that I look at trend lines, I call them trade trend lines. I shouldn't even call them trend lines. I should call them trade lines. The way that I look at these trend lines that I draw, most trend lines need 3 points to be valid. I only need 2. One is called the initiating point, and the other is called the defining point. And they're represented by those circles you see right now. The initiating point, self-explanatory, right? The defining point defines the steepness or flatness of the trend line. So prior to all this price action here, this was the defining point of this particular trend line. Then it broke. The first target of these particular types of trade is always the defining point, right? And then a close above it leads you to a target of the initiating point. There's more that goes into it than that. But it's in essence, that's what it is. So when I used to trade these were my only trade years and years ago. It's the only thing I ever did. When I got a close above the defining point, I would go long. On my next target, by the way, would be the top of the body of a candle of an initiating point. It wouldn't actually be the initiating point. Yeah. So in this case, it would have been right here. Okay, not the actual point. I still stick with that. But right now, I've redrawn the trend line to go here. All right. If we break the trend line, this is the first serious point of resistance. And everyone who's watching this right now is going, fucking duh.
Yeah.
Of course it is, because that's where this rotation is, right? But you have other things going on because sometimes you have resistance in the form of an old high that doesn't really act as resistance at all because it had something else behind it, right? So for example, Bitcoin's a great one to look at. Here, this rally here took us to this point, and we may have had some whale. We all know that a whale can affect the price of Bitcoin more so than anything else we look at. I think.
Absolutely.
I mean, hell, we had frickin' Warren Buffett selling out all his Apple, and it didn't crush Apple, right? But in Bitcoin, if the Warren Buffett of Bitcoin, maybe it's Michael Saylor, actually sold all of his, that would affect the commodity. Maybe there was a big trade in here that caused this to accelerate lower. But you look to the left, there's not a whole lot of support for this being a resistance area. Maybe this right here, right? Yeah. But that's an old high, not a bunch of old lows. So I look for it to move up to the defining point. And then if it breaks above it, I either hold the trade or I use a trailing stop or whatever. So we're in that situation now.
Where do you think the buy it with both hands level is?
Above this red candle's high or the defining.
That's what I thought right there too. Yeah. By the way, can we look at 2 more things real quick?
Yeah.
You mentioned Apple. I'd like to talk about Apple and then Google. Which, by the way, I'm supposed to be wearing my fedora that my niece gave me. It's
that's supposed to be the thing now, right?
Let me go get the fedora. Just keep talking about Apple. I'll be right back.
All right. So Apple is obviously in a medium-term downtrend and has been. we're 2 weeks away from big tech earnings. And here's one thing we know for sure. Big bank earnings is not correlated to big tech earnings. They are, at least not that I've found. Maybe you guys could comment over the next few shows as you found a correlation. I have not. So big banks having good earnings does not mean big tech is going to have good earnings. And it's really the critical factor for the January effect to me is big tech. So this is obviously in a medium-term downtrend. It's still in a long-term uptrend as defined by the 200-day. Hell, how far are we from the 200-day? This particular tool measures percentages. So
that's
we're
nifty.
9.2% away from the 200-day based on today's price action.
So that's interesting. And the fundamentals are, okay, so Warren Buffett sold all his Apple. Does Apple innovate anymore? Most of us, me included, have made a lot of money on Apple stock over the last 15 years. What do you do now?
So if it's me, the first thing I do is I start with that typical trend line. Okay.
Yeah.
And honestly, it's drawn from here to here. That's it.
Yeah.
All right. Now, again, initiating point, defining point. Why is this a defining point? Well, it's the first place where I could draw a trend line where none of the following candles touch it.
Right.
Right. That's what I'm always looking for. The very next, as long as the very next candle doesn't touch it, I've got a trade line or a trade trend line. But look where it comes in. Right. It'll be above the 50 and it'll be above the slower moving average of the rotation zone if we get a break of the trend line. And these will continue to move lower, but the 8 and the 21 will move higher. So now if I get a break above this trend line, what have I said? Well, I've said my first target is the defining point.
Which
so
is
if I measure from here to here, that's about 6.5% move. I like that trade.
Yeah, I do too. Of all the charts we've looked at, that's an interesting setup, which is it's not anywhere close to triggering yet.
Nowhere close.
But if it does, that could be interesting.
People ask me all the time, why, if you like Apple, why aren't you buying it? That whole thing of like, well, if you like it at, 244, you should have loved it at 229. I don't do things that way.
No, that's not the way it is.
From the world of don't catch a falling knife.
Exactly. And I agree with that too. Let's look at Google as the last thing. Is that okay?
Yeah, it's good. Alphabet. Oh, I need to get rid of all this. I haven't looked at the stock in a while. So I need to get rid of all that. All right. So for me, Google is in a consolidative trend, which I actually really like. I hadn't looked at this, but I might start looking at it now.
That's why I brought it up. I thought you'd like it because it's a quantum computing play as well, right?
It is. And I think personally think Jensen Huang was wrong. I just think that was him saying, don't get out of my stock yet.
Yeah.
Personally. So I'm going to just draw a parallel channel right about here and about here. These kinds of channels are rough channels. They're not right channels. But what I will tell you is that if we get a close above this upper trend line, right, this upper channel trend line, actually, if I drag this here, I bet it's horizontal. It is. Yeah. That actually is a technical technique right there, but not important. If we get a close above this, that then we get a test. So we got to close above it here. Wasn't a channel yet, for the record. But we got to close below that then continue to accelerate to the bottom of the channel. This is where the channel was formed, between basically here and here, okay? If we get a close above this and then a retest and a move back above, the first measured move target for me is half the distance, sort of like an NFL penalties, half the distance of the goal. So this particular, it's down in here. I forget where these are. Here we go, long position. So if I go from here up and I measure sort of halfway, it's about 2.8%. So I bring this down to about 2.8% approximately. That's about your measured move target. It also coincides with a break of this high, which would be a really good thing for Google. So that would be the target, to be halfway up the channel. This is measured move targets. If you guys don't use measured move targets, you should, because they give you targets in the realm of new all-time highs that are pretty damn reliable.
Okay, so here's the trade I have on. I had a lot of duration on it, so it is making money. For every 180 put I sold, I bought 2 190 puts. And when I put this on, the market was below 180. I'm thinking of rolling that out for more duration, selling the 200 put to buy a multiple more of the 205 or the 210 puts above it and be long more puts. Because I think if it breaks out and that the 200 is going to be tough to get through, but if it does, I think it runs. Do you like that trade?
Yeah, because essentially you're looking again. I roughly drew the horizontal channel, and people are going to argue as to where that channel should be. But if I just move this particular channel line to the body of this candle, I bet that's right around 200.
Yeah, that's why.
It's 199 basically.
Right.
So,
and make it, I like to pick 200 and 210 because they're easy, nice round numbers. It's easier to keep track of your position when you got a crap ton of different options on. If you see nice round numbers, which by the way is another one of the reasons that they're not psychological levels, 200, 300, big round numbers. It's just there's a crap ton of options, open interest at those positions because of people doing the same thing I do. It's just easier to think of it that way. 200 and 210. You agree, right?
I do. And earnings are February 4th on Google. So there's plenty of time for it to break out.
Sure.
And by the way, if it breaks out, again, hypothetical situation, if it breaks out to the upside and then we're approaching earnings and we're above this horizontal channel, guess where the pullback is going to be to that you need to watch? It's going to be right here. Right here.
Yeah.
Right in here. If it breaks out, because it will run.
Yeah.
And you'll have made a decent amount of money on that. So it'll basically come back down to 200 and it may gap below it. Okay. On an earnings day. Google has huge earnings days. You look at like, you can go back in time. Here's an earnings gap right there.
You can tell right away what that is. Yeah.
But look at how much more it pulled back, right? It gapped higher and then pulled back. And then if we were, say, let's say for pretend, this was the upper trend line of a horizontal channel here, right? Look what it did. Pulled back to it and rolled back up.
Cool. I like it.
So earnings, I mean, that can be fun if you're in an established, profitable position prior to an earnings day.
Right.
I'm going to go out on a limb and we can keep an eye on this. It's going to break above 200 before earnings.
That's what I think too. Yeah. And I like it again. Jensen Huang knocked those the quantum computing stocks down, which Google is only tangentially a quantum computing stock, but it is. They had a big announcement. One of the reasons that it ran about 20 bars ago, whatever it is, was because of the announcement of gains in quantum computing. Anyway, so now let's get to the important stuff too. So one of my favorite nieces, she's actually Margaret's niece. She's not even blood to me. She saw the movie Feast of Seven Fishes, and she saw the Joe Pantaleone character who wore a fedora, and she says, "You need to wear a fedora." And she said, "I bought you one." Now I thought she was just yanking my chain because it never came on Christmas. It came like 3 days ago. And she wants me to wear the fedora. Now I want to wear it with like a 3-piece suit, my long wool coat, and a scarf. I think that's a solid look. What's your opinion, Bob? But more importantly, people, don't be afraid to tell me with the comments what you think of the fedora. Not as a steady diet, just as an occasion. Bobby, what do you think?
I'm going to say that I like your niece's idea of wearing it casually, if that's what she said. And the reason is with the coat and the scarf, it's like you're in a costume.
Yeah.
With that hat,
with
that hat, you're just a grease ball, which I like.
I like that too.
Yeah, that's really shirt, you're just a grease ball.
Yes, and that's what we've been all our life. Which, by the way, and Bobby, I know we ruminate about this stuff quite often, but it was kind of funny being born in the '60s, growing up in the '70s in an Italian neighborhood, a little Italian neighborhood in a non-Italian suburb. And people did look at us like we were a bunch of greaseballs and criminals. Yeah. By the way, I liked, hide your daughters from me, which, by the way, was stupid. I didn't even know how to talk to a girl. They were like, keep it away, keep her away. But anyway, it's good. You got anything else to add, or should I play us out?
No, I think we're good.
Okay, this was fun, guys. Thank you guys so much for the support. Remember what Bobby and I are trying to do. We are trying to create independent journalism platforms where people can come on, say exactly what they think, and not have to bow to the sponsors, not have to bow to overzealous producers who want to get a certain ideological point out there. You might disagree with us, but these are our honest opinions, and there is no sponsor that tries to tell us what to say. Please try the Tradier 3-month Options Pro. You guys will not be sorry. If you have any questions about it too, I will give you Bobby's home phone number. You can call him any time of day to walk you through options trade. This is Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. Thanks for joining us.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.